Back. And now we're ready to talk about the receipt process or receipts that you might have coming into your department. This is what the official prescribed receipt form looks like that you should be using in your offices if you take in money. It's a General Form 352, and there shouldn't be any substitutes unless it's something that your computer system generates or it's a form that's been approved by the State Board of Accounts. Sometimes we see what we refer to as dime store receipts, or maybe more appropriately now, because dime stores no longer exist, like Office Depot type of receipts that you go in. They're very generic. They may not be pre-numbered, those types of receipts. This is what you should be using as your receipt form, or something that has the same information on it. The copy in your materials, if you have it, has 3 receipts shown. That's what the prescribed form looks like when it comes from the printing vendor. It's 3 to a sheet on an 8.5 by 11 size format that is spiral bound. Always insist, if you're involved in the ordering of these from a printer, that they be pre-numbered by the printer. Most of the times your fiscal officer, your clerk treasurer, or bookkeeper is going to be the one ordering these forms, and they pretty much know to make sure they're pre-numbered. And they will be if you order this form, the 352. If your system if your computer system generates receipts, they ought to also be pre-numbered. So your system should assign a receipting number to receipts when you print them out so that they can be accounted for. I'm just showing one on this screen so you can see what it looks like. This is what it looks like when they come through to a page. These receipts are to be issued each time that money is received in your office or department. Collections are to be remitted to the clerk treasurer or your fiscal officer as timely as possible. Some departments may make the deposit themselves, going straight to the bank and depositing them, and then they would turn in a verified deposit receipt from the bank to the fiscal officer for recording. Or you may simply take the money, the cash, to the clerk treasurer's office, and someone from that office would then take it to the bank. Whichever method you use or that you have it in your unit, make sure that you turn that money over timely. There are some statutes on how often collections are to be deposited, so compliance with that statute is something that needs to be taken into consideration. Usually it's by the next business day, or in some instances, if you have accumulated $500, then it has to be deposited. But if you're turning that money over to your fiscal officer, most units of any size are going to have $500 fairly quickly within a day or 2 or 3. So just make sure you get it to whoever is taking it to the bank, get it to them as quickly as possible so that they can deposit it timely. When you turn these into the clerk treasurer or your fiscal officer, they should be giving you a receipt for the money. And I may be ahead of, no, we're good. They should be giving you a receipt for the money, and you should document the receipts that you are turning into them on the receipt that they give you back. Now, what that means, for example, let's say you have 5 receipts and they're numbered 123 through 127. And they totaled $117, and you're taking that to your fiscal officer. The fiscal officer is going to give you a receipt for $117 because they've received that money from you. And we would ask that you would write those receipt numbers that you turned in on that receipt. So when the officer gives you the receipt for $117, write a receipt number 123 through 127 on it, and keep that with your files. That way, when we are testing deposits and we see a deposit for $117 that the clerk treasurer made, for example, we can trace that back to the receipts that you gave them and ensure that they in fact deposited all the money that you gave them, as opposed to in some cases where maybe you gave them $117 and maybe they only deposited $17 and did something they weren't supposed to with the other $100. So kind of keep track of the receipts that you turn in, what those numbers are, and how much they are, that kind of thing. I'm sorry. Got away from my clicker. Next, you want to consider internal controls. Review the collection practices and policies in your office periodically. Is money secure prior to turning it over to the fiscal officer? Make sure that not everyone has access to it while it's still in your office. Those types of things. Also look at the amounts that you're taking in. Revenue should be staying about the same month to month or year to year, if not rising slightly. So you might want to look at receipts for the month of August of 2019 versus the receipts for the August of 2018. And are they about the same or maybe going up slightly? If there are material variances, especially if the receipts are declining, you want to look into that as to what happened. Was there something special that happened in the period that you're comparing to that made it spike? And so the period that your current period, it went down, and maybe there's a reasonable explanation. Maybe you had some kind of fundraiser in that previous period that you're comparing it to. So anyway, try to compare it to like a month of this year to the month of last year, or maybe 6 months of this year to 6 months of the same 6-month period of the previous year, that kind of thing, just to make sure that everything is pretty close to accurate, or any variances you should be able to explain. And now we're going to talk about ambulance services, emergency medical service. The governing body of a city, town, township, or county, by the governing body's action or in any combination, may do the following. They can establish, operate, and maintain an emergency medical services. They can levy taxes under and limited by Indiana Code 6-3.6 and expend appropriated funds of the political subdivision to pay the costs and expenses of establishing, operating, maintaining, or contracting for emergency medical services. They can also authorize, franchise, or contract for emergency medical services. However, a city or town may not provide, authorize, franchise, or contract outside of the limits of the city or town without the approval of the governing body of the area to be served. And likewise, a county cannot provide, authorize, or contract for emergency medical services within the limits of any city without the consent of that city. Can also apply for, receive, and accept gifts, bequests, grants, and aid, state, federal, and local aid, and other forms of financial assistance for the support of the emergency medical services. Can establish and provide for the collection of reasonable fees for emergency ambulance services that the governing body provides for. You can pay the fees or dues for individual or group memberships in any regularly organized voluntary emergency medical services association on their behalf or on behalf of the EMS personnel serving that unit of government. This slide is going to talk about hazmat fees and where they're authorized under Indiana Code 36.8.12.2-6. A fire department imposing a charge for hazardous materials cleanup costs may bill the responsible party for the total value of the assistance provided, as determined from the state fire marshal's schedule of services and charges issued under 36.8.12.16, letter H. Money collected must be deposited in a hazmat response fund or the general fund of the city or town that established the fire department. And that money can be used for the purchase of supplies and equipment used in hazmat responses, the training for members of the fire department and skills necessary for providing hazardous material assistance, and payment to persons with which the fire department contracts to provide the services related to hazmat assistance. A fire department may not bill for services provided that duplicate services provided by another governmental entity. And the responsible party is subject to penalty for failure to pay the full amount of the charge made within 60 days after the issuance of the bill for payment by the fire department. The amount of the penalty is 10% of the amount of the charge that remains unpaid on that date. We'll talk about fundraisers a little bit. Again, slide is showing cities and towns here. They're the governing body of that city or town, so the city council or a board of works or a town council, if it's a town, must approve any fundraising activity. You should have good internal controls over that fundraiser, like how the money will be collected, what's going to happen to it after it's collected. If you're selling tickets, how is that going to happen? Are the tickets pre-numbered? Are they accounted for, etc.? The money in this case for a city or town fire department having a fundraiser flows through the office of the clerk treasurer as the fiscal officer, or it could be a city controller if you have one of those, but the money does flow through the fiscal officer for accounting purposes. And you want to make sure too, make it clear who the fundraiser is benefiting. Sometimes, especially with fire departments, when there is a fundraising activity, if it's a fundraiser for the town, try to make it clear in your advertising that you do. If it's a fundraiser for the volunteer fire department, which is a separate not-for-profit incorporated entity, make sure that if the proceeds are going to go to that entity, make sure that your advertising makes that clear too for the citizens, because sometimes it is a fundraiser for the volunteer department and people will pay and do whatever to attend the event, and only to find out that the money didn't go to the city or the town, that money went to the volunteer fire department. We get a lot of calls about that, where they thought the money was going in one place and actually ended up going the other place. So the better that you can communicate that, I think the better it'll be for your units, and it'll help clear up some of those questions with the citizens. And this slide deals with those volunteer fire departments, and it's the same with the internal controls. You need to have those established. An incorporated volunteer fire department can, as a 501c3, keep the donations they receive. They don't have to legally go to the city or the town or the township. And again, try to make it clear who that fundraiser is benefiting. Another area of receipts that you might run into, depending on what you've got going on, is if you have vending machines. And I think this page, if you have handout materials, should be in it. It's a copy of the Cities and Towns Bulletin from December of 2016. And it basically will tell you that if you've got vending machines, you need to have written guidelines on where the profit or the money from that goes to. If the machine is available to the public, the revenues should go through the city or town records through their general fund. If the machine is in a restricted area, so say it's in the break room or the kitchen of a firehouse, then if the governing body wishes, the proceeds can be used by those employees who use the machine. And that would mean the money would get appropriated or put aside in a special fund for the firemen to use as they see fit, that if your machine is restricted area. And our thought process is, if the machine is in an area, let's say it's out in front of your firehouse where anybody, a kid riding his bike down the street could stop and get a pop or something, that money should benefit everybody as a whole. And that's why we say that situation should go in the general fund. Restricted area, it's the fireman putting money in the machine. The fireman should get the benefit of any profits that come from that. And that can be so designated by your governing body. And again, establish good internal controls, like who has access to the machine, how is the money collected, etc. And what we see most often is a vending company will come in and stock the machine and collect the money, and then they turn around and remit you a commission check, maybe once a month or once a quarter. If you have more than one machine, you can split the commission. Like the fire department might have one in the lobby or outside, and then one in a restricted area. Make sure you have good controls on how that split is going to be made. Maybe you get one commission check for those two machines. You decide you want to split it 50-50. So 50, half of that commission check would go in the general fund. The other half maybe go into that restricted fund that you have that the fireman can use for fire department purposes. We've always tried to recommend the commission method, or where the vendor comes in and stocks the machine. We have seen where some units not go that way. They want to go out and buy their pop themselves, stock the machine, collect the money, because you get a little bit more for that. But there's also a little more responsibility for it. You would have to be responsible for showing how much stock you purchased during a period, how much it was for sale for, because we have done testing for that before. For example, if you buy 1,000 cans of pop in a month and you sell it for 50 cents a can, we're going to want to see, did that money come in? And if less than what we calculate comes in, that's when we start asking questions like, where's an inventory? We would expect a periodic inventory of the number of cans of pop you've got sitting around, so that we can account for those as not being sold. So there's a lot more accounting that goes into it if you are handling the collecting of the money and the stocking of the machines. That's where it's usually just, it's easier to let the Coke or the Pepsi people handle the machine and just send you a check, and then all that needs to be done is that check get deposited. If you have handouts, I don't believe the information on donations is included, but we do receive quite a few questions about donations. There are a lot of people in your communities that are willing to donate money to departments to help with public safety. But once a donation is made, what do you do with it, or how can it be spent? What can it be spent on? Well, first, your governing body, your council or board of works, needs to okay the donations in writing. There should be an ordinance authorizing the creation of a donation fund, and the ordinance should be specific on what types of items that the money can be used for. And we don't like to see, as a permitted use, any language like any use is authorized by the fire chief. That's too specific, it's too generic. We wouldn't want it to see it more for, like, it could be used for equipment, or equipment for the fire truck, or furniture for the fire station, or anything like that. It would be very specific on, if you're going to have a donation fund, what that money can be used for. We've seen donation fund, if you've got different types of donations going on, you could have different donation funds. For example, we've seen a fire equipment donation fund, or a fire vehicle donation fund, or just simply a fire donation fund. If you've got multiple ones, each one of those needs established by ordinance again, so that you can designate what those uses are. And if you have a fund like that where it's restricted, like a fire equipment fund, and you use it on equipment, you do not need an appropriation, or you don't need to set a budget for it, as long as you're using it for the restricted use. If you have unrestricted donations, like somebody just says, here's $100 to use for the fire department, that type of donation, being unrestricted, other than it's to be used for the fire department, can go in the general fund, and then your governing body would have to set an appropriation or a budget for it. Cumulative firefighting, building, and equipment funds. Uh, 36.814 authorizes cities and towns to provide a cum building and equipment fund for the purchase, construction, renovation, or addition to buildings, or the purchase of land used by the fire department, and for the purposes of firefighting equipment, including making the required payments under a lease rental with the option to purchase. The fund can also be used for the purchase, construction, renovation, or addition to a building, the purchase of land, or the purchase of equipment for use of a provider of emergency medical services under Indiana Code 16-31-5. After that tax is collected, Any tax collected after establishing the levy shall be deposited into a separate fund to be known as the Building or Remodeling, Firefighting, and Police Radio Equipment Fund. This fund can't be used for any purpose other than the purpose for which it was raised. Expenditures can only be made after an appropriation has been made available. Because there's a levy involved with this fund, the appropriation would be approved by the Department of Local Government Finance, or DLGF. So if you've got any questions on that process, on the setting of the appropriation, etc., you want to contact DLGF. They're located in room N1058, 100 North Senate, Indianapolis 46204, or their website is in.gov/DLGF. So pause for a second. If you have any questions on receipts or revenue type items that come into your fire department, you can ask them at this time. And if there are any questions, go ahead and hit the pause button, and you can start back up when you're ready. We will talk about disbursements. We'll finish up part 3 of this presentation where we'll talk about disbursement type items. The first one that affects cities and towns can be clothing allowances. Your materials may have our audit position regarding clothing allowances as found in the Cities and Towns Bulletin from March of 2009. For cities, Indiana Code 36844 deals with clothing allowances. For towns, clothing and equipment allowances are optional. They're not required. They're only required for cities. If you're a town, you can pay a clothing or an equipment allowance, but it requires a home rule ordinance to be established. And the Board of Accounts gets lots of questions about the tax implications. As always, the Board of Accounts recommends that any specific tax question be directed to the Internal Revenue Service because they're the taxing authorities. We don't want to give you tax advice and find out that it's wrong or not our understanding, and that was going to impact you and not us. So if you've got any questions, contact the IRS. What I can tell you about the most common questions that we get regarding this is this clothing allowance taxable or not? And it's our understanding that if the unit that you work for writes you a check for your clothing allowance and you don't have to turn in any kind of receipts or documentation that showing what you purchased it for, that would be subject to tax. If you do get your money and you have to turn in some receipts that show that you used it for fire-related clothing or whatever, it's our understanding in that situation where you have to turn in the receipts showing that what you purchased, that is not taxable. So in other words, if your unit gives you a check and then they're done and you can use that for clothing or pretty much anything you wanted to, I think the IRS considers that taxable because you wouldn't be required to use that for clothing allowance. It's just kind of supplementing. On the other hand, if you have to turn in something and show that you used it for that, I think the IRS has determined that that's not taxable. But again, you want to contact the Internal Revenue Service for specific guidance, or a tax preparer if you're getting clothing allowance in that way. For volunteer fire departments, Indiana Code 36812.5 calls for clothing allowances of not less than $100 a year, and an automobile allowance of not less than $100 a year. Again, the tax implications are pretty much the same. No receipts necessary. It's subject to tax. If you have to turn in receipts, it's probably not subject to tax, but again, consult the IRS for specific guidance in that area. Compensation, your salaries, the amount that y'all get paid. For cities, that is set by the safety board under Indiana Code 36832. And for towns, the compensation is set by the town council under Indiana Code 36532. Volunteer fire department contracts. I know the slide says cities or towns, but 36812.3 permits a unit, which could be a city, a town, a county, or a township, to enter into a contract for fire protection with a volunteer fire department. The contract must provide the amount, including insurance and clothing, of the contract, and it should also stipulate the payment methods. Is it one check for the entire year? Is it one check every 6 months? That's my experience, the most common method that you usually pay twice a year. Or if it's monthly payments, whatever it is, the contract should stipulate that. And new in July of 2019, Indiana Code 36812 4.5 requires such a contract to be in writing and for a fixed term, whether it's 1 year or not. Insurance proration for volunteer fire departments is covered under 36812.6. And it states if a volunteer fire department serves more than one unit, each unit has to pay insurance in the manner stated in the statute. There are 5 steps in the statute that talk about this, and it's probably too detailed to get into here, but just know that the statute exists and how each unit would be responsible for insurance regarding a volunteer fire department. Another type of disbursement area is purchase of equipment. And for it, all of the applicable statutes are under Indiana Code 5-22. Basically, you're purchasing equipment, which is a supply. There are different thresholds that pertain to what you have to do. So if you're going to purchase something that's less than $50,000, you have to use what's called the small purchases policy of your governmental unit. Each governmental unit should have written policies on how purchases under $50,000 are going to be handled. And it's just up to the local unit to decide what they want in that policy. The big thing that we're going to look for during an audit is, does such a policy exist? It could say you have to get a quote. It may say you have to get 10 quotes. It could say you're going to take sealed bids for anything between 25 and 50,000, and then under 25,000, you're going to do some other method. It's just basically whatever your governing body wants to do. They just need to establish a policy. If the purchase is between 50,000 and 150,000, 522.83 says you have to obtain at least 3 quotes from vendors known to deal in the type of item that you're trying to purchase. So if it's a pickup truck that's going to cost you $75,000, or you estimate it's going to cost in that ballpark, you're obviously going to want to get quotes from 3 car dealers and not somebody that does roofing or some other type of it. It's got to be related to what you're purchasing. If it's if it's greater than 150,000, then 522.7 says you have to take competitive bids, and there's a whole lengthy process involved with that. Advertising, hearings, setting the opening date, the specifications for what you want, the date established for accepting the sealed bids and when you're going to open them, and then awarding contracts. So if you're doing anything on a large scale, like maybe it's a new fire truck and it's going to be more than 150 grand, you want to look at 522.7 for the things that you'll need to do. And then something to remember, trade-ins, if you have a trade-in, that doesn't lower the threshold. If you are buying something that you anticipate to be $52,000, which would require 3 quotes, but you're trading in a vehicle that has a value of $10,000, that trade-in doesn't lower your purchase price to $42,000 in that example, and therefore you can follow your purchasing policy, your local policy. It's the item that you're obtaining, and in that case, it would be $52,000, and you'd have to do the quotes because you'd be in that ballpark. So the trading in doesn't affect the threshold amount. Vehicles can be purchased through the state's QPA contract. I think that may be the next page in your materials if you have them. A screen print from their website at in.gov/IDOA/2448.htm should take you to all the information you need on the state's QPA. I also have a phone number if you want to write it down. It's from a prior presentation that I made, but I was preparing for this one. I couldn't verify it. I couldn't find it anymore on their website. So I'll give it to you and you can call it, and it may take you to where you need to speak to somebody, or it may not. So I apologize for not knowing, but it's area code 317-233-3901. Then you can also piggyback off of another unit's bid to purchase something if you have an interlocal agreement in accordance with Indiana Code 361712. So if your neighboring city bought a fire truck 6 months ago and now you need one and you liked what they purchased, you'd like to have the same thing, all you would need is an interlocal agreement between your unit of government and the neighbor, and you can purchase the same truck at the same price. You don't have to go through the whole bidding process all over again. You can rely on the bidding process that the neighbor did. But again, you'd have to have an interlocal agreement, and you may need to speak with your city or town attorney about what needs to be done in order to do that interlocal agreement. It takes an ordinance and all that kind of stuff. So speak to somebody about that if that's an option for your unit. And payments in advance. We see this a lot or get a lot of questions related to fire trucks. There is no authority that we can find to pay for items in advance of receiving them, including making a deposit on a purchase that you're making. I know some fire truck manufacturers will offer a discount if you pay like for half of it in advance or a substantial amount of it in advance. But since we find no authority to do that, we can't recommend that you do so. And in fact, if we noted during an audit that you did that you paid for part of it in advance, it would be subject to a finding in our audit report. And we like to mention this when we're talking with cities and towns in particular, because we did have this happen many years ago where a town went out to buy a fire truck. They paid a significant amount of it in advance, and the vendor went out of business, and they lost their deposit that they put down on that. And what they should have done is not paid for that. They should have followed the statutes and say you don't pay for until you've received it. Kind of the things that we talked about in part one were claims, and that claims process has to be approved, and you have to receive it, and somebody has to acknowledge that you received it before the claim can be paid. So keep that in mind if you run into that question when you're buying a large piece of equipment. You can't pay for anything in advance. You can't, including deposits. Okay, we're to the end of this part as well. I'll go ahead and stop this, and if you have any questions amongst yourselves, feel free to take as much time as you need, and we will move on to part 4 when you're ready, just with some miscellaneous items related to most different types of units of government, but as they apply to fire departments and that area, we'll talk about them to wrap up.